It is Monday, February 19th, 2018. It is 8 p.m. and so 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little coin metal. And it was a very educational, very victorious, get your ass kicked at Jiu-Jitsu Monday. Sorry about that. Had that last hit of the bowl, and that one kind of spun my head a little bit. Thought it was Friday. Anyway, so Jiu-Jitsu was terribly good today. I felt really, really solid on the mat, and I've been saying for a while now that I thought I needed to up my game. That I thought I needed to get an additional day in. Basically just a little less time off the mat to try to be like forgetting the muscle memory of it. And so yesterday I decided I wanted to get my hair cut, and so I went into town and I figured, fuck it, I'm in town, I might as well go to Jiu-Jitsu. Because it's going to be open mat right now, so I could go in and I can get in a couple rolls, maybe extend my gas tank a little bit, maybe maybe work some angles or something, work some moves or something to that effect. And so it was really interesting. Okay, so first I go in there, and there's a gentleman that I'd never seen before, or I think I might have seen him one other time. He was wearing a blue belt. I'm not entirely sure if he was a blue belt. If he was a blue belt, cool. If not, that's cool too. Anyway, point being, I had an excellent roll with this gentleman. He was very, very technical. He almost had me like 3, maybe 4 times. And but I did get him around to where I could have got him in an arm bar, but I couldn't disengage his S grip. I disengaged it twice. I put my foot on his bicep, just kind of grabbed with both arms and pulled back, and I disengaged it just long enough, and like something would happen, like he would roll into it or something like that, and then he'd re-engage that fucking S grip on me, and so basically, I basically wore myself out. I kind of gas tapped. Where when somebody starts to go harder to try and get me, that sets off several triggers in my head, and it's only recently that I've been able to cut down some of those and get and keep my composure. It's like I feel them tightening up on me. I hear their breath get a little tighter. I feel them like turning to pulling in a little tighter, like they're gonna pull me into an arm bar or something like that. And like I said, when somebody gets angry or they get frustrated, I can hear their breath. I can hear it in their breath. It's like, okay, this guy's obviously he's gone off his game. He's gone full aggressive. And now it's time to get tactical and let him make a stupid mistake. And so it's like that's just how I react to it. It's like, okay, he's getting a little tougher now. Okay. Oh, you want to roll out that way? Okay, I'll let you go that way, and then I'll catch you and I'll turn around on you and be on top. And so that's kind of what happened today, where I took that lesson back from that and brought it to today. But anyway, so I rolled with this guy, and I crapped myself out. He got into a dominant position, and I just laid out the old 90-degree arm, let him go ahead and seal and secure the Kimura on it. And he didn't tighten it up or anything. He knew I was just giving him the tap, and just to get it over with because I was tired. But he was tired too. He did roll more after that, but he did take a minor break. But anyway, so I was so taxed out that there's this point I hit with my breathing where I forget to control my breath. I'm very, very conscientious about my breathing, And so when I get to that point, it's really hard for me to get my adrenaline back down, get a hold of my breath, slow down my heart rate, and then get my composure back. And so I felt like leaving right then. So I did leave. And I went into the place where I was going to get my hair cut at. And they had like 6 or 7 people there waiting, and there was only 2 people that were cutting hair. So it's like, it's going to be another hour easy before one of them was opened up. And so I signed the board, and then I let this girl know, hey, I'll be back, but it looks like you're going to be tied up here for like an hour or so. Is that about right, you think? And she's like, yeah, about an hour, so, I'll remember you. I'm like, all right, whatever. So I'm like, well, fuck, I can't get my hair cut now. Got about an hour. I'm going to go back to jiu-jitsu. I'm still in my gi, so fuck it. So I went back, and I got in another 2 rounds of really good rolling with some of the guys that I was a little more used to than the first gentleman, but nonetheless, very, very challenging gentleman. And I had a lot of fun with Coach David. I think he might have been preparing for a tournament, which I think I should be doing too. But anyway, he seemed to be wanting to, get very, very little break in between his rounds. So he's like taking 5-minute rounds with people, like continuous. Like, you. Hey, come over here, roll with me for 5 minutes, and then you over there, 5 minutes, you over there, 5 minutes, and he did that for like, I want to say like a half an hour, man, just continuous. And I didn't complete a full round with him, but his partner that he worked with the first round gave him like, I think 2 or 3 minutes of a round 2 and was just done. Coach David just like racked him. And so he asked me again. He's like, "Hey man, you want to roll?" I'm like, "Yeah, all right." So I finished out that 3 minutes with him, and very, very skilled. I fear for who he's going to be facing, because even with my weight advantage, I was not on par with him. He wasn't even really exerting a lot of strength or anything like that, but he's so technical that no chance, none. I know that if he wanted to really apply the skill or whatever, I'd have lasted about 5 seconds, but he was trying to get a 5-minute round out of me, so he was letting things go and so on and so forth. But it's like, yeah, it was a lot of fun, because he would put me in the position slowly enough for me to be able to feel him doing it. And like I said, I know that if he was like really going for it, no, that would not have been as easy for me to avert, I'll just say that. Anyway, we did get some increases to the repertoire, and I'm trying to hunt one sign down right now for our first dance. I got some new body count, but I'm actually going to have to wait for that one. Can you believe that shit? It's 21st century. Amazon doesn't have everything like all logged and ready to go for you to just like download and stuff. But I don't know. We're not 100% transitioned into the 21st century yet, apparently. And so, let's see. Scroll. Yeah, I got a whole bunch of new 12-foot ninja. And, let's see here. What else? Megadeth. Meshuggah. No, you know what? I'm just going to play some newer Meshuggah. And that'll be the first dance, Clockworks, here on Coin Metal. And that was Cold Chamber with Loco. Yeah, it's funny is it's another one of those bands that I discovered through Pandora. And one of the things that I did not like about it is that I didn't know, like, I didn't know what band it was, because I wasn't watching what band it was actually playing. And, you know, it had been a while, you know, it's like I'd listened to like 3 or 4 songs, and I just didn't go back and look. Anyway, point being that I was looking for the song by looking for Me Loco instead of just Loco, and I could not find it. But I think somebody posted on YouTube or something like that, where they put in like Me Loco, and I found it. Anyway, but yeah, Cold Chamber. That's one band that I probably should expand my repertoire on. I know they do have more than one album. But I have not had an opportunity to go back and check and verify some of their stuff. And I've been looking for other bands to expand out into. I mean, because metal is very diverse. I mean, I play a relatively... how should I say this? I mean, the range of stuff that I play is kind of homogenous, kind of, you know? I mean, it's good stuff, but it's very, very approachable as far as metal is concerned. But I do know that there is stuff out there that will still rock your socks off and is still very approachable. I haven't found all of it yet, and I want to play it here, you know? Yeah, here we go. Shock the Monkey. CC is posting stuff in the Verge Currency channel, and you guys ought to join us in there. If you're listening, you know, hook it up in the Telegram, man. But anyway, I've been trying to expand stuff into the repertoire. And what I'd really like to do at some point or another is get bands that haven't really had a lot of, like, how should I say this? Like hardworking bands that have been around for a while, like say maybe like Red Fang. I just checked them out the other day. Really approachable sounding stuff, high quality production, and I definitely feel like adding that to the repertoire. You know, Behemoth, another one. I want to say Bolt Thrower, although I haven't listened to enough of their stuff. But you know, like I said, there's a ton of bands that I haven't been listening to or haven't been a fan of that I know I would both like and would both like to play on this show. And so, you know, if you got any recommendations, don't be afraid to throw them out there on the Twitter, or in a less permanent way here in the Telegram, where you can always find us. But yeah, so we are going to get into some articles here. I do have some interesting stuff. And this one, I don't know if we're going to get too much into that. But, you know, there are going to be scams throughout cryptocurrencies, and it won't really matter whether or not there is a seal of approval ever, you know, like authored by a regulatory body. There's always going to be somebody finding another way to sneak around it. And I think that that's a tendency that we should be trying to avoid with regard to cryptocurrencies. That rather than trying to create new crimes to try and enforce on one another, that we start looking at this in terms of, if everybody does things within the current laws that we do have with regard to fraud, bribery, extortion, anything like that, those kind of laws, they are already on the books. There's plenty of legal definitions for the actions of one human being to another. All that's really changed here is the medium of exchange. and of course the promises that are being made. But I think that cryptocurrencies in general, if anybody is really promising you anything other than maybe the function of the coin, something that they can't necessarily prove, I'm dubious. Only because in this space we don't have to trust. It's you put up or you shut up. You produce or you do not produce. And if you don't produce, somebody else will. If it's truly necessary, somebody will create it. Even if it's not necessary, somebody will create it, and it'll even get popular too. It doesn't necessarily have to be the most useful thing in the world. People have to have access to it. It's like MySpace. It was not terribly useful, but it was in certain ways. It was for a certain group of people. Like when it started off, it was just musicians. And they were sharing like touring information and stuff like that. I mean, there were other people on it, but I mean, for the most part, a lot of it was musicians, figuring out where shows were and stuff like that. And then, of course, it tried to expand itself, and when it did, it introduced all kinds of elements into it that it didn't necessarily need. One thing I did like about MySpace that I don't like about Facebook is the ability to edit your page. I mean, like there are ways to edit your page in Facebook, but I really liked the way that MySpace let you format things, and I felt like it was a little more inclusive of my vision of how my content should look, But anyway, on to articles. And I do notice that Bitcoin is kind of doing just a teeny tiny bit of sideways motion there around, it was, I want to say, around 8,100 the last time we were looking, but it's back up there to 8,596 at the moment. Ethereum is, I don't know if it's up or down at this point. It's at 554.74. Bitcoin Cash is up a teeny tiny in relative terms to everything else. And Litecoin does appear to be at least leveling out. Anyway, continuing on, I got this article here. DOJ, SEC argue vague laws, no excuse for ICO fraud in new filings. I would say that as well. This by our old friend Stan Higgins. So yes, penis. And this is authored on March 20th, 2018. Let's go for it. The U.S. government has pushed back against an effort to dismiss the charges in an ongoing initial coin offering fraud lawsuit. In twin filings submitted Monday, the Department of Justice and the Securities and Exchange Commission dismissed claims by defendant Maxim Zaslavsky that U.S. securities laws don't apply to the sale of tokens tied to two ventures, one backed by real estate and the other by Diamond Holdings. Zaslavsky, who has pled not guilty to securities fraud, was first charged by the SEC last September, followed by additional charges sought by the Justice Department in November. The SEC case against Zaslavsky has been put on hold pending the outcome of the DOJ's lawsuit. The filings are notable given the growing footprint of the U.S. government and the SEC in particular in the cryptocurrency space. The SEC has adopted an increasingly active approach since it first publicly declared that tokens issued in conjunction with the DAO, the now defunct Ethereum-based funding vehicle, were securities. Yeah, whatever. And just last week, a senior official with the SEC's Enforcement Division disclosed during an event appearance that the agency is conducting, quote, dozens of investigations in this area. At the heart of Zaslavsky's push to dismiss the charges is the argument that the two tokens in question aren't actually securities under U.S. law, which he argued is too vague and are currencies instead. Prosecutors pushed back against his claim, stating that both the Recoin and Diamond token fall squarely within the boundaries of the Howey test. That doesn't necessarily make them securities. Quote, now facing prosecution for securities fraud, the defendant claims that his investment opportunity was no investment at all. It was just the sale of a currency backed by a commodity. First real estate, RE coin, and then diamond. The U.S. government's lawyers wrote, quote, the currency, according to the defendant, are the worthless certificates sent to investors that prompted some to ask for refunds. They went on to argue, Zaslavsky also claims that securities laws have not provided him with fair notice that his conduct was unlawful, despite having told his investors that he was in full compliance with the law. The defendant's arguments do not hold water in light of the allegations in the indictment and controlling law. Accordingly, his motion should be denied. Vagueness, no excuse. The Department of Justice's filing strikes a decidedly dismissive tone toward the argument that SEC regulators aren't clear enough when it comes to the question of cryptocurrencies and ICOs. Let me check something out here really quick here. Yeah, I just had to check and verify something. The defendant invites this court to be the first to declare the Securities Acts unconstitutionally vague, either facially or as applied, the DOJ's filing quipped. Notably, the government argued that Zaslavsky knew that what he was doing when he began soliciting investments for both token sales, writing that he had more than sufficient notice that this conduct constituted securities fraud. What is more, there is evidence that the defendant was, in fact, on notice that he was subject to securities laws, the government wrote, going on to add that one investor in the REC coin ICO had asked about compliance and had been told in sum and substance that the investor had nothing to worry about with respect to legal compliance. The SEC also contacted the defendant as early as August 15, 2017, requesting information about the RE coin ICO. The defendant wrote that he planned to hire an attorney, but instead proceeded with the Diamond ICO. The filing continued. The DOJ and SEC filings can be found below, and oh my goodness, we are going to follow that up. Yes, most certainly. Yes. Oh, it's only 36 pages. Well, I don't know. Wait a minute, hold on. It's about 36 pages. I think we can do that. I think we can do it! But we're not going to do it on this side of the music. But we are going to go back into this bad boy, because that's that'll be interesting. Although, I think I either did a show about this guy or this project at some point or another. And because I recall there being a coin that was, or an ICO that was backed by quote-unquote diamonds. It's like, are you fucking kidding me? And another one was some weird unobtainium or some other thing. I mean, not the coin unobtainium. That was a whole different business. This one was, it was like some sort A10. That was it. Yeah, that one was, so stinky fraudulent that, I mean, the SEC shouldn't even bother. I mean, because like you look at it and you're like, are you fucking kidding me? This isn't real. These people are making up shit now. You know, it's like, I mean, you almost want to throw money at it just to watch it fail. You know, just to watch them turn around and rip everybody off and then go to jail and all that other shit. It's like, oh yeah, go for it, little bit of bait. Quick, everybody, give him $10, just enough for him to fucking buy a rope and hang himself with it. You know, like I said when I started going into this, there is no getting around scammery with regard to cryptocurrencies because we're talking about money. You know, I think the error with trying to associate it with real world goods beyond tracking and stuff like that, and still just the same. There's nothing in the world that will bind a number or a key irrevocably with an item unless, of course, the key is like written on the item itself, or the key is the item. And I think that's the mistake that a lot of people make with regard to cryptocurrencies, is that, like, where I see them being really utilizable is things like stocks. You know, when you issue a certificate, an actual paper certificate, right? You could be tracking the certificate via on a blockchain and be exchanging its ownership directly on the blockchain. That establishes its ownership forever. As long as that thing exists in paper form, it's associated with whoever owns it. Now, the fact that we can do that without actually having to print it out, that's one thing. But I mean, like, you could watermark a stock certificate with a public address and maybe an associated private address somewhere on the certificate or in association with the certificate. Point being that it would be trackable on a public blockchain. You know, and assuming that you have public miners that are actually interested in mining for you, you know, but you can use the quote unquote blockchain for all sorts of other purposes within your production without having to try and do the whole thing for everybody else. And I think that's the saddest approach that most people take with this, is that, you know, they want to do the whole thing for other people too. Oh yeah, great. Now you're the trust arbiter. You're the seal of approval. You're the person that's going to get paid off to maybe delay reporting for a month or two. And you know, and we're back to where we were. We're back to trust. And we don't need trust for this kind of thing anymore. And like I said, I think that's one of the things about this technology that I think that a lot of people are kind of stepping over. You know, it's like, oh, I want to be everybody's money and make money on their transaction fees. You know what? Only so many people are going to be able to do that. Only so many currencies are going to be viable in the future for people to do that with. And the fact of the matter is the more third parties there are involved in the transactive process, the less viable the coin is going to be, because each one of those is a fucking bottleneck. And each one of those is a hand in your pocket. And the whole point of making things more efficient is eliminating some of the hands in the pockets. You know, we cannot be surprised when some big whiz-bang thing comes along and displaces 30% of the workforce. I'm sorry, I think for a lot of you out there, that has actually happened a few times, and it's going to all happen at once for large segments of the population out there. And you know, that's why, like a year ago, I was telling bankers to take up macrame and shit like that, because there will still be banks in the future, but they will have a much less physical footprint. and what they're actually doing, the amount of capabilities that they will have will be far in excess of what they currently do. If they do maintain the current manpower that they do, it's only because that locality has enough demand for their services for them to require a physical presence of the same size. Otherwise, it's going to shrink. That is the future, kids. So, I've been saying for a while now, I think that people need to be concentrating more on physical goods that they can provide. Because the kind of interfaces that we have nowadays to markets, they're so ubiquitous and easy. You can open yourself up to markets that were never available to you before, via the internet, of course. And with cryptocurrencies as a payment medium, give me a break, man. Why aren't we just running into this shit head first? I mean, a lot of people are, but they keep wanting to get into that third party seat. They want to be the one waving the magic wand, making up money out of nothing. And I guess that's like a natural instinct or whatever. But at that point, I think I don't know. I think that's the point where we're going to see the most fail as far as projects coming into the future. Now, I'm not saying any particular project or any particular order of projects or anything like that, but I am saying that a significant segment of the coins that are out there right now are not going to be out there in another probably 2 or 3 years. I mean, it does not take long for one of these projects to run out of gasoline. You hear people talk about gaslighting. Well, gaslighting costs money. And if you don't have enough productive capacity to be recouping on your investment of capital, you're going to run out of capital. That's all there is to it. And so these ICO projects, it's cool that they're attached to Ethereum in some ways. Like if Ethereum goes up, they don't have to burn as many of their coins in order to maintain ops. But when it goes down, they have to burn more. Everything gets more expensive. And I think that that's a reality that not too many of these projects are taking into account. They're looking at what Ethereum is currently doing, and they're like, oh yeah, Ethereum's always going to be great, But what if Ethereum goes down to like $150 tomorrow and stays there for 2 months? You're going to be burning 3 times as much of your gas just to keep the lights on than you are right now. Assuming, of course, that's how you've got your investment structured, or how much you've got of your liquidity in Ethereum tokens. But the point being that you can't keep that kind of fire going. You have to have substance underneath. You have to have people that are willing to circulate your coin as a medium of exchange, a store of value. You have to have that. If you don't, you don't have a project. And I think that's a point that a good many of these ICO projects miss, is that they're all looking to be kind of like parasitic, They're not trying to contribute to, they're not trying to be contributors. They're trying to be parasitic, and I think it's an unfortunate leftover from the top-down centralized bank model. And I listened to what's that guy, Rick Falkvinge, and one of these days I'd really like to have him on this show, because he's a very clear thinker when it comes to cryptocurrencies, at least what I can tell from his show. And he was talking about this as well, and like I said, it just makes me want to have money here. Anyway, let's go ahead and throw back down into some music. And I've been wanting to play this song for a little while. Megadeth, Holy Wars, The Punishment Due, here on Coin Metal. And that was Slipknot with Custer. And so I was going to read that what do you call it, the lawsuit. I got it buried around here somewhere now. I was going to read that lawsuit. However, I came across something that I found even more entertaining for a multitude of reasons. But let's go into this article here and see if we can find any more about this particular story, because I think this is hilarious. Anyway, this is on Cointelegraph.com by Mr. Aaron Wood, authored approximately 33 minutes ago, and so I am going by the name and the picture. Yes, penis. A stiff one at that. U.S. President Trump bans U.S. citizens from buying Petro. Continuing on. President Donald Trump of the United States has banned the Venezuelan government-backed cryptocurrency, the Petro, by executive order March 19th, Bloomberg reports, and we are definitely going to right-click on that. The ban reportedly comes as part of a campaign to put pressure on the Venezuelan government of President Nicolas Maduro. By the order, U.S. citizens are banned from engaging in transactions using the oil index digital currency. The ban frustrates the efforts of Maduro's government to boost foreign currency reserves. The token offering accepted transactions in U.S. dollars and euros, meaning that Venezuelan citizens could not legally participate, as there is a ban in Venezuela on buying foreign currency. The order also authorizes U.S. Treasury Secretary Steven Mnuchin to issue regulations to enforce the executive order. The Treasury Department announced sanctions on 4 Venezuelan government officials earlier this year. According to Mnuchin, President Maduro decimated the Venezuelan economy and spurred a humanitarian crisis. Instead of correcting course, the Maduro regime is attempting to circumvent sanctions through the Petro digital currency. So fucking pointless. The Treasury Department further warned investors in January to avoid the Petro, calling it, quote, another attempt to prop up the Maduro regime while further looting the resources of the Venezuelan people. The Petro has struggled in finding legitimacy and interest among foreign governments. Earlier this year, the Venezuelan government claimed that Poland was interested in trading food and medicine for the Petro, which was later denied by the Polish Ministry of Finance and Ministry of Foreign Affairs. Cambodia, however, seems to have taken inspiration from Venezuela and is considering its own state-sponsored digital currency. Entepay, Cointelegraph reported earlier this month. So yeah, let the mirth ensue. Honestly, I think Maduro should give up on the Petro. I don't think it's a good idea for my own reasons. Rather, what I think Maduro ought to be doing is this: following the lead of his people. See, Venezuela has a shit ton of electricity. And relatively free electricity at that, given their hydroelectric system. So rather than trying to horn in on this whole cryptocurrency thing with his own cryptocurrency, what Maduro should be doing is maybe dedicating some of that wealth of his to a mining project that won't mine Petro, but will mine Ethereum, or Bitcoin, or Litecoin, or Monero, or Verge, or any one of a number of other cryptocurrencies. Globally traded cryptocurrencies. Now imagine what happens then. You know, you talk to China, you know, and you say to China, hey, look, China, I will be willing to sell you our oil for Litecoin or Ethereum. And they say yes. Now you've gone around all of this, you've gotten over this whole, I need to circumvent the world with my own fucking cryptocurrency. No. You just trade it for fucking Bitcoin. You sell it in Bitcoin. So what? You can't sell it in US dollars. Big fucking whoop-de-doo. You can still use the US dollar or any other currency as the base. So say you're dealing with China, say, look, if you pay me Bitcoin in the value, you know, if you pay me the value of my oil in yen, but in Bitcoin, that would be great. Because then you have Bitcoin to turn around and put out onto the market and trade like everybody else does. Or you can try and make money on it. Heaven forbid you should do something like that. I mean, really, this seems to be, to me, like the best way to go about it. I think this is actually the way North Korea has been going about it, is that, you know, rather than worrying about fucking around with their own cryptocurrency, they're either mining or they're trading for other people's cryptocurrency. Say, give me your Ethereum. Give me your, you know, Ethereum Classic. Give me your Bitcoin. You know? And it gets around all of this mucky muck. What's he going to do? What is Trump going to do to you if you're selling your oil for Bitcoin? What embargo could he place on you then? Because you know damn well China is not going to stop mining Bitcoin. You know? That's just a given. You know, and there's no embargo or anything they can put against it, because again, it's global, it is transnational. There are American miners, there are Canadian miners, there are miners all over the place. So again, we're back to this concept that I keep trying to drive home on this show, that cryptocurrencies are the mutually assured destruction quagmire of the 21st century. With regard to regulation, with regard to jurisdiction, all of that shit. You know, you overstep on one place, you squeeze the business to another. You overstep in another place, you squeeze the business onto another. And there are people that, you know, they'll keep acting nice to it to begin with, and then it'll go away. And then they'll have to act nice to get it to come back, because they're actually invested in it from the first time. You know, I think this is a really unique balance that hasn't been in play like this for a very, very long time. You know, I mean, like, I want to say like about 100 years ago, maybe not even that long, because there's actually still songs about it being written in the 1950s. The concept of a company store and company script, that's not entirely gone from our memories. And there are certain companies that have like their own online shop for their own people, and they have their own little currency that they trade in within their system. That exists. But the idea of companies issuing their own currency, that's not a really alien concept. You know, it used to be that you spent so much time at the job that you'd end up in the hole to the company store, and then you'd be paying yourself off to the company store by working more, and so on and so forth. It's kind of a form of slavery in some senses. But in any case, I think that's the problem that all of these guys are going to run into. Not just Maduro. Venezuela is just like it's like a laboratory experiment in how you can regulate cryptocurrencies effectively. And so far it's proving that you cannot regulate cryptocurrencies effectively. And they're showing us what the cycle looks like. First, there's more bans, and more bans, and more bans. And they find out that none of the bans work. And so they start legislating or try to do some sort of enforcement action where they're busting miners. But what ended up happening from that, and I keep talking about it on the show, but it did happen, where the cops would take the mining gear, and because it wasn't de facto illegal activity, it was just quote-unquote abuse, kind of impoliteness, misdemeanor kind of thing, they'd take the fucking hardware and they'd set it up at home and start mining with it. Did the problem go away? Are there any less miners? No. It just changed from you being a miner to them being a miner. And then after that, Maduro gets desperate and says, okay, I can't stop my people from trading and dealing in all that other shit in cryptocurrencies, so I'm going to create my own cryptocurrency, and maybe they will exchange that instead. And the answer to this question is no. Because your cryptocurrency is only as valuable as the market that it can service. If your cryptocurrency can only service the people within your own borders, it's valueless to everybody else. And so this whole thing with Trump saying that, oh, you can't trade in Petros, give me a fucking break. That's like an incitement to buy the shit just to spite him. And I mean, really, if you're going to throw your money down that rabbit hole, there are far more deserving projects that you could be dedicating your funds to. Because I feel like the Petro, they're probably issuing Petros against volumes of oil that have already been accounted for with bolivars. And it's that same concept that I keep coming back to, where you cannot peg a physical commodity to a cryptocurrency, because there will always be a disparity between the physical commodity and its availability and the quantity of available cryptocurrency. There will either be more available oil at one point, or there will be more available cryptocurrency at another point. Either way, the pairing will be broken. The peg is not real. And again, it can be overpromised again and again and again, and debased like every other currency Venezuela has tried to use. And I think every government is going to come up to this over and over and over again. And it's one of the reasons why, I think anyway, why banks don't really like cryptocurrencies. Because they are fully accountable. And when you are basing your game on assets that, again, are probably overpromised 1 billion times over and monetized 1 billion more times over, you cannot compete with something that can actually verify its ownership on a global ledger. Universal ledger. You can't do that. You can fool some of the people some of the time, but you can't fool all the people all the time. And with regard to cryptocurrencies, everybody's got a copy. Or at least a lot of people do. More people than, or not enough people, I think, but more people than have a copy of the Federal Reserve's books. We'll just say that. Because to my knowledge, only about 13 people have that. And they probably don't have a full accounting of every single dollar in circulation. But we do have an accounting for all of the Bitcoin that have ever been mined. And so I think that's, again, this problem that a lot of people are having with regard to understanding what cryptocurrencies are, or what they are for, or what they do. And I think in the longer term, we're going to keep coming back to it, where the solvency of the blockchain and the legitimacy of it for Bitcoin and other proof of work coins is going to be, I won't say a reserve of trust, but it will be a more trusted medium of verification than others prove to be. Because the transaction is either valid or it is not. And if it is not, it usually gets bounced. And because of that, again, we're so much more accountable than national currencies. It's not going to matter what Trump thinks, or what Janet Yellen thinks, or any of these other groups, what they have to say about cryptocurrencies. Because if I can verify the transaction happened, again, it doesn't matter what they say. The fucking transaction happened. It's valid. Somebody accepted it. Otherwise, it wouldn't have been included in the blockchain. Anyway, speaking of fake and real, I got this article here on CryptoSlate. Fake PayPal cryptocurrency email, mystery deepens. And this is by Sam Town, authored March 18, 2018. With Bitcoin currently in the throes of its third worst crash in history, after April 2013's 83% crash from $259 down to $43, and the 2013-2014 crash from $1,163 to just $152, many cryptocurrency community members are seeking clarification for the sudden drop in crypto values across the board. A key driver in the hysteria surrounding the current market drop is an email purportedly sent by payment juggernaut PayPal, advising account holders to, quote, cease any activity that results in the trading or transfer of cryptocurrency. I doubt this did it. The email advises account holders that trading or transferring cryptocurrency in any way related to the PayPal platform is strictly prohibited, stating that if users continue to engage in crypto-related activities, their accounts will be terminated. Analysis reveals email is fake. PayPal is a major player in the online payments ecosystem and is almost universally reviled across the crypto community as a centralized platform, but the idea that it may actively issue statements opposing cryptocurrency platforms has caused a significant amount of concern. The PayPal cryptocurrency warning emails sent to account holders on the 16th of March were received by millions of users, but has since been confirmed as fake. Analysis of the email itself reveals mkts2944.com is the originating domain. While this may exonerate PayPal as the culprit behind the email, presenting it as a simple phishing attempt, the implications of the email are far more complex and potentially worrying. PayPal has released no conclusive information regarding the apparent hack and has, concerningly, not provided any clarification regarding how the culprit behind the email accessed the database used to send the email. While it's possible for anyone to access a wide range of hacked BTC-related databases, see haveibeenpwned.com, the cross-reference with another database The sheer volume of users affected by this hack has led many community members to theorize that the list originated from PayPal itself. Fake PayPal email sent or spoofed from IBM domain. Further analysis of the email, however, reveals another story entirely. Firstly, the email did not make any phishing attempt to separate readers from their PayPal information or crypto security information. The purpose of the email, it seems, was simply to make it appear as though PayPal will close the accounts of users participating in the cryptocurrency market. Performing a whois request on markets 2944.com domain reveals that it is registered to international tech giant IBM, an extremely interesting development. Many crypto community members have been quick to question why a domain associated with IBM is disseminating FUD, although the domain has been associated with other PayPal scams in the past. Some Redditors are assuming that the email is a paid marketing campaign run through IBM's Watson marketing campaign automation service, implying that a party with deep pockets is heavily interested in spreading FUD in the cryptosphere. However, it seems highly unlikely that IBM or its AI software would be actively trolling the cryptocurrency community. Actually, not entirely true. Spoofing, however, could be the tool used to deceive the email recipients. It's feasible to forge the sender's address in order to trick the email software. Essentially, this can trick a user into thinking the email may have originated in one place, but in reality, it came from another. No formal statement, market manipulation possible. PayPal has not yet released a formal statement regarding the email. As PayPal has recently filed a number of patents on cryptocurrency transaction systems, it's highly unlikely that the platform is intent upon blocking users from using cryptocurrencies or is even able to determine if users are participating in cryptocurrency trading in any case. The circumstances of the email, however, are highly suspicious. The current market state, combined with the surge in short positions on Bitcoin futures, as evidenced in BTC COT reports, and the fact that the email made no phishing attempt, lends credence to the hypothesis that the email could potentially be another manifestation of high-level market manipulation. Fuck yes, it could be. Jesus Christ. You people don't fucking pay any attention to shit. Hold on a second here. We got a comment here at the bottom, and we're going to see if this one gives us any clarification toward my end of things, but continuing on here. Spence Benson writes, or Banson, my apologies here, sir. This is very serious. PayPal and IBM were the people behind it. Their systems were never breached. It was deliberately made, crashed the crypto market. I hope the SEC will have a crackdown on this. Not likely, because this has to lead to insider trading. Due to the panic and fear they caused to the crypto market, they linked up with some wealthy officials who want to short the prices in the crypto market by using PayPal as a medium of spreading FUD and misinformation, causing the market to tumble in price. This issue should be seriously addressed. Do they realize the amount of damage they have caused people or the investors in the crypto community, causing investors to lose tons and tons of money? A lawsuit should be filed against both parties, PayPal and IBM, allowing insider traders while investors were selling during the market crash. I don't know if a lawsuit per se might be in order. Possibly some sort of criminal thing. I think this level of market manipulation, if in fact it turns out to be such, because as this article does assert the possibility of spoofing, but it's really funny because they suggest the possibility of spoofing on behalf of IBM and PayPal, but not people like Ross Ulbricht. Oh, no. That was him. Nobody else could have been fucking DPRK but him. You know, or Mt. Gox. You know, a lot of people like to assert it was all Carpelli's. Carpelli's did everything. He himself has asserted there were hackers involved, that there was hacking involved. So, again, I believe that there have been players in this market that have been playing both sides of it from the position of the legacy players. You know, banks, IBM, these kind of guys. They've been playing in our field. That's pretty much it. And the people that trade cryptocurrencies, they know this shit. You know? The fact of the matter is that the coin goes up, the coin goes down. Anybody tells you they're an expert, they're probably a clown. You know, we can't necessarily account for all of the factors, all of the reasons why the coin does go up or go down. I will say this, that the transaction volume has been going down significantly. The number of transactions being done now is a little less than half of what was being done at the peak. I mean, we were pushing the shit out of 4,000 transactions per block, and now it's closer to 1,000, 2,000, and it just bounces around between there. So, you know, there are a lot of reasons for Bitcoin to go down in value, and one of the things I think is, of course, its utility as a currency. And so when the fucking transaction fees just climbed through the fucking roof last time, between the valuation of Bitcoin and, of course, the network congestion that we were experiencing due to the 1 block size limit. I mean, the 1 megabyte block size limit. Yeah, people just got disaffected, you know, when they can't get their fucking transaction done within 10 minutes, within 20 minutes, within 30 minutes, an hour, 2 hours, 19 hours. I mean, come on. Give me a fucking break. That indicates to me that there's a bottleneck that needs to be addressed. And no, handing fucking transaction processing off to a third party in a system that was designed specifically to work without the need for third parties is not the fucking way out. At least not in my book. But, you know, I'm but one person, you know. I know I don't represent everybody. But I think the majority of people out there do agree that we should be trying to keep shit on chain. And then making blocks a little bit bigger would probably not such a bad thing. You know, I've said it before that even with SegWit transactions, if you have 2, 8, 16 megabytes to put transactions into, that's 16 times as many transactions, SegWit or not. There's no reason to limit the block size with that in mind. I mean, we could literally get the cost of transaction fees down to Satoshis per fucking transaction. And that, would that be such a bad thing? I mean, really, would it? If you were able to do 32 times as many transactions, what would you care if each one was cheaper? Overall, you would be making more money. Because that would be happening every 10 minutes. I think that's some perspective that people lose about cryptocurrencies for some strange reason. I don't know if it's just people not talking about it in that context or what, but, you know. Anyway, I got this other article here about the lies that bankers spread about cryptocurrencies. And that is the title of this article. It's by, it's on the Financer.com. And let's see, does it give us an author? It says about Chris. Oh, this is Chris Skinner's blog. So yes, penis. And so yeah, here we are. The lies spread by bankers about cryptocurrencies. And we're not entirely alien to this concept, but I'd like to see somebody else's perspective on it. I had a chat with the Financial Times the other day and provided lots of background as to why I don't think cryptocurrencies are the choice of criminals. The comment that was reported was the following. Chris Skinner, a financial technology author, said it was, quote, complete rubbish to suggest the main use of cryptocurrencies was criminal. Quote, there is some criminal activity associated with some cryptocurrencies, but it is quite minimal, he said. It's a myth that the financial community wants to promote. I feel the need to explain this further, so here goes. My response was in answer to Vasant Prabhu, Chief Financial Officer of Visa, the card network, who made two claims. Number one, most people have no idea what they're doing with cryptocurrency investments. And number two, cryptocurrencies are mainly used by criminals. With the first point, I agree. In fact, I loved the John Oliver show that discussed crypto and started with the line that cryptocurrencies are, quote, everything you don't understand about money combined with everything you don't understand about computers. A perfect combination for idiots to invest in. I agree with both Vasant and John, as many people are buying cryptocurrencies for no other reason than other people are buying them. The second point I completely disagree with. Mr. Prabhu said cryptocurrencies were a favorite for criminals. Quote, it's very hard to get dirty money through a banking system. Cryptocurrency is phenomenal for all that stuff. Every crook and every dirty politician in the world, I bet, is in cryptocurrency. This guy is in cryptocurrency. The guy that just said that is in cryptocurrency. Betcha. This is complete baloney, and it is a smokescreen being created by financial people to deflect the real purpose of cryptocurrencies, which is to use software and servers to manage value rather than buildings and humans. In other words, cryptocurrencies have the ability to reduce or even replace banks, which is why I find it interesting how often I hear a financial person say that Bitcoin and cryptocurrencies are just for criminals when it's blatantly not true. Unfortunately, because they are in a position of authority, politicians believe them, and unfortunately, because they are in a position of authority, the media believes them. And unfortunately, because they are in a position of authority, the public sometimes believes them too. Most law enforcement authorities, however, state that the levels of criminal activity with cryptocurrencies is so tiny that it doesn't matter, and specifically does not warrant deflecting their time and energy to investigate them. Just to illustrate this, the total worldwide investment in all cryptocurrencies is around $300 billion today. Even if criminals were running 10% of that, it's just $30 billion. That is an insignificant amount compared to the trillions of dollars being laundered through the traditional financial system, mainly through offshore companies buying up properties. From Telegram, November 2017, organized crime generates income equivalent to around 2.7% of global GDP. Around $1.6 trillion of this is laundered to disguise its criminal origins. Financial crime is undoubtedly a worldwide problem. From What Mortgage, February 2018, Julian Dixon is CEO of 42 Data, whose research found that more than a third, 37% of all suspicious activity reports across the entire legal sector were related to property. Quote, "For criminals, the vast amount of cash involved in property purchases provides the perfect cover for laundering the proceeds of drugs, terrorism, and firearms offenses." From the Times, February 2018, Rob Wainwright, director of Europol, revealed that 3 to 4% of the $100 billion of illicit cash circulating in Europe is laundered through anonymous digital currencies such as Bitcoin. So that's around 4 billion max right now. That's less than a particle of a drop in the ocean of crime globally. I would happen to agree with that. Now the concern may be that cryptocurrencies offers the opportunity to launder funds. This is possibly true and is why I said there is some criminal activity with some cryptocurrencies, which is tiny today, but might grow over time. Even then, it is speculative and too early to call. For example, that paragraph from the Times is factually incorrect, as Bitcoin is not anonymous. In fact, nearly all digital transactions can be tracked and traced online, and therefore offer the worst use case for money laundering. This is why the only currency that criminals currently use in any volume for illicit activity is Monero. Not entirely, but it is because it is nearly equivalent of digital cash. Nevertheless, the total market cap of Monero is $3 billion. And even if half is criminal activity, it's totally insignificant on a global scale. All in all, it is obvious that most financial people have created this myth of criminals opting for cryptocurrencies for two reasons. Number one, it is to protect their turf, as they don't want to lose their role as intermediators of finance. And number two, it is to deflect the authorities from looking at the true perpetrators of illicit monetary activity, namely the banking system. I'd have to agree with that. Bear these 2 points in mind when I say banks were built for the physical distribution of paper, which is why cash and property are the physical assets that are the preference of criminal choice. If you didn't know it, London is actually the money laundering capital of the world. British registered companies and British-based banks helped move at least $20 billion of the proceeds of criminal activities out of Russia between 2010 and 2014. Transparency International's research found 766 UK corporate vehicles involved in 52 large-scale corruption and money laundering cases, approaching valuations of $80 billion. Around half of the 766 companies alleged to have been involved in high-end money laundering were based at just 8 UK addresses. The Home Affairs Select Committee hearings found that the London property market is the primary avenue for laundering of $100 billion of illicit money a year. No wonder first-time buyers cannot get on the property ladder. If anything is the preferred market for money launderers, then it is banks, not cryptocurrencies. No wonder financial people are trying to deflect the media elsewhere. Bottom line is, all things move to digital distribution of data. The trail to audit such movements gets easier because they can be sniffed out and monitored. As a result, most criminal activity will continue to leverage the weak links in the chain, which is the physical distribution of paper through cash and property assets in the traditional financial system. I've written a lot on this in the past and would like to point these two blog entries for more. Laundering as a service, a bank USP. Money laundering is most likely to wash with your local real estate agent. Yep. And there's also the lengthy but worthwhile read, Why Bitcoin Cannot Be Regulated. We might actually follow that one up. Anyway, this guy missed 1/3 point, and I think a lot of people do miss this one. And it's why I call Krugman the Krug, because Paul Krugman, he's probably like the most notorious bad voice as far as like indicators with regard to movements in the market, and I think there's a reason for it. I think the Krug is probably the best fudder and troll in the universe. I'm serious about this. That, you know, people like him and people like Jamie Dimon, that they are heavily invested in cryptocurrencies. They play it just like you do. As a matter of fact, they probably spend 4 to 6 hours a day looking at their own charts, managing their own fucking crypto, just like you. They're in these fucking Discord channels and shit like that. You don't know that, but they are. They're watching what's going on in coins. They want to make money too. And as their roles in what they do becomes less important for people, not only themselves, but people like you and me, they will cease to exist. When you look at what you can do with cryptocurrencies, you start reflecting back on what a bank can do for you, and you're like, well, you know, I could go through the bank, and I could go through all that bullshit, or I could just go to the guy that wants to buy the house, and I can hand him the deed, and he can sign it, and we can photocopy it, and then we can associate it with this cryptocurrency transaction that we're about to do, and he can pay me in Bitcoin. And now that transaction is on the public ledger, can be verified by anybody at any time, that yes, the transaction did happen, and that according to the data associated with the transaction, it is in fact a representation of the exchange of ownership of that piece of property from one individual to another, sans all of the ambiguity of third parties. No financiers. Imagine what that will do to people like Goldman Sachs in the longer term. You know, I think that's really the point that they've been focusing on the most with cryptocurrencies, and I think it's an illusion to assume that they aren't fucking buried up to their necks in this shit. You know, people talk about whales on the exchanges. Who do you fucking think those people are? I think they're fucking banks. They're banks and they're fucking governments. They've got enough money to slush around and throw around on the fucking exchanges. Introduce some liquidity into that market. They've got it, so they're flaunting it. And the best you can do is try to enrich yourself on their movements, because they are pretty obvious about the way they do things, where they are, where they're going to be. But, you know, like I said, I think that's the number 3 bullet point that Mr. Chris Skinner here did miss in his points about the let's see here, where is it? My response was in answer to Vasan Prabhu, the chief financial officer of Visa, the card network, who made the 2 claims. Number 1, most people have no idea what they're doing with cryptocurrencies. And number 2, blah, blah, blah. there was a third point on here, or there was a point on here that he had failed to miss here. Here. It was, all in all, it's obvious that the most financial people have created this myth of criminals opting for cryptocurrencies for 2 reasons. The number 3 reason is because they are invested in cryptocurrencies and they need the price to go down so that they can buy more, so that when it goes back up, they can sell and make more money. Just like you. You know, this flattens out the curve. It's like the introduction of a firearm to a fist fight. Okay, it doesn't matter if the fist fight is between somebody who's 4'6", 110 pounds against somebody 6'5", 350 pounds. It doesn't matter if the 4'6" guy has a firearm and has the opportunity to draw it and point it at the other guy. It doesn't matter how big the other guy is. If the 4'6" guy can put a piece of lead between him and the other person, that other person is going to die. And so the same thing happens on cryptocurrencies. If you malinvest, it doesn't matter how much money you are throwing on the market, we will eat your fucking buy wall. We will eat your fucking sell wall. We will make you buy your coins back expensive. We will make you sell them to us cheap. It is the great leveler, and we are going to take that paper. Anyway, let's go ahead and throw back down into a little bit of music. And of course, one of my favorite songs is playing by the Contortionist right now. And I feel like playing this one. Yeah, the Contortionist, Thrive, here on Coin Metal. And that was Powerman 5000 with Bombshell. Yeah, I never thought that I would get into Powerman 5000, but I am definitely hooked. I like that song a lot. You know, it's kind of how I feel when I'm on the mat, dropping the bombshell. Anyway, and let's see, did we read this whole thing? Lies spread about banger, blah 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 blah. Yeah, we did. Okay, I just wanted to make sure that we actually covered that, because I think that's something that people just don't really consider about cryptocurrencies. Is the largest detractors could in fact be investors, and they're fudding it to get the price to go down, and they want to buy. Got to keep it in mind. Anyway, I had this other article that was kind of attached to that, and this is on hackernoon.com, and this is by Beautyon, and it was on March 15th. Why America can't regulate Bitcoin. Hearings on Bitcoin and its derivatives are being held in the U.S. on a regular basis, and invariably the expert witnesses fail to properly describe the actual process going on. If they used the correct language and excluded all analogies, the only possible conclusion would be that America cannot regulate Bitcoin under its current legal system. The Constitution guarantees the inalienable rights of American citizens, and therefore Bitcoin is a protected form of publishing. The only way Bitcoin can be made regulable is if the Constitution is changed, and that does not mean adding a new amendment. It means removing the First Amendment entirely. Inevitably, the anti-Bitcoin protagonists will face a robust and ultimately successful legal challenge that will remove the possibility of any sort of bit license or interference from the CFTC, FinCEN, or any other agency. It will also remove any possibility of interference at a state level. The consequence of adhering to the basic law of the United States will cause America to become the center of all Bitcoin business for the entire world. Not entirely true. Let me explain why this is the case, or at least why you think it is the case, Beauty On. Some say that Bitcoin is money. Others say it is not money. It doesn't matter. What does matter are three things. That Bitcoin is, that the Bitcoin network does what it is meant to do completely reliably, and what the true nature of the Bitcoin network and the messages in it are. Bitcoin is a distributed ledger system maintained by a network of peers that monitors and regulates which entries are allocated to what Bitcoin addresses. This is done entirely by transmitting messages that are text between computers in the network, known as nodes, where cryptographic procedures are executed on these messages in text to verify their authenticity and the identity of the sender and recipient of the message and their position in the public ledger. The messages sent between nodes in the Bitcoin network are human readable and printable. There is no point in any Bitcoin transaction that Bitcoin ceases to be text. It is all text, all the time. Bitcoin can be printed out onto sheets of paper. The output can take different forms, like machine-readable QR codes, or it can be printed out in letters A to Z and numbers 0 to 9. This means they can be read by a human being, just like Huckleberry Finn. At the time of the creation of the United States of America, the founding fathers of that new country, in their deep wisdom and distaste for tyranny, haunted by the memory of the absence of a free press in the countries from which they escaped, wrote into the basic law of that then young federation of free states an explicit and unambiguous freedom, the freedom of the press. This amendment was first because of its central importance to a free society. The First Amendment guarantees that all Americans have the power to exercise their right to publish and distribute anything they like without restriction or prior restraint. Congress shall make no law respecting an establishment of religion, or prohibiting the free exercise thereof, or abridging the freedom of speech, or of the press, or of the right of the people peaceably to assemble and to petition the government for a redress of grievances. This single line forever precludes any law that restricts Bitcoin in any way. In 1995, the U.S. government had on the statute books laws that restrict the export of encryption software products from America without a license. These goods are classified as munitions. The first versions of the breakthrough public key encryption software, Pretty Good Privacy, or PGP, written by Philip Zimmermann, had already escaped the USA via bulletin board systems from the moment it was first distributed. But all copies of PGP outside of the United States were, quote, illegal. In order to fix the problem of all copies of PGP outside of America being encumbered by this perception, an ingenious plan was put into motion using the First Amendment as the means of making it happen legally. The source code for PGP was printed out. It's as simple as that. Once the source code for PGP was printed in book form, it instantly, and more importantly, unambiguously, fell under the protection of the First Amendment. As a binary, the U.S. government ridiculously tries to assert that immaterial software is a device and not text. Software, or quote, binaries, is text that can be run on devices. Clearly, the idea that software is a device is patently absurd, but rather than waste money arguing this point in court, printed out PGP removed all doubt that a First Amendment act was taking place. The printing source code was shipped to another country perfectly legally and beyond challenge, and then transferred to a machine by OCR, optical character recognition, a software tool that can turn a printed page into a text file, removing the need for a person to manually type out a printed page, resulting in a PGP executable that was legally exported from the United States. The direct analogy to Bitcoin should be vividly clear to you now. PGP and Bitcoin are both, number one, pieces of software that can be rendered as printed text on paper. Number two, software that generates unique blocks of human readable text. Number three, designed to generate text that is 100% covered by the First Amendment. The purpose of PGP is to absolutely verify the identity of the sender of a message and to ensure that the message was not read or changed in transit. The purpose of Bitcoin is to absolutely verify the ability of the owner of a cryptographic key, which is a block of text that can unlock a ledger entry in the global Bitcoin network. Both of these pieces of software are messaging systems and services that absolutely fall under the First Amendment in every aspect, from the source code used to generate the software clients that do the message signing to the text the compiled clients generate, send, receive, and process. Bitcoin is text. Bitcoin is speech. It cannot be regulated in a free country like the USA without guaranteed inalienable rights. With guaranteed inalienable rights and a First Amendment that explicitly governs publishing. Bitcoin and PGP generate messages that are initiated by their users. Each of the messages that are generated by these two pieces of software are unique. The only bodies of law that could possibly be invoked regarding their output and source code are copyright and patent law, respectively. The Bitcoin source is not copyrighted, and the core idea is not patented. And in any case, none of this has anything to do with the nature of Bitcoin messages. Copyright gives the generator of these texts privileges under the law, imposing fines on someone copying your message without your permission, but that law has nothing to do with exporting or imposing attacks on the messages themselves. And of course, forbidding the copying of your Bitcoin payment message rather negates the purpose of using Bitcoin. Taking all of this into account, if any legislator, regulator, 3 or 6 letter U.S. agency, or other bureaucrat dares to try and regulate Bitcoin, they will be on a hiding to nothing. On a hiding? What's a hiding? Anyway, continuing on. A legal challenge will be mounted, and will have to be mounted, because if the state can legislate against a single piece of software that generates messages, a legal precedent will be created, allowing the U.S. government to regulate all software no matter what it does. Gosh, I wonder if this invalidates the idea of Trump banning the Petro. Bitcoin's operation is fundamentally no different to what all email, text messaging, and internet connected software does: relay messages. The only difference is in the software that tracks how the messages of the sender and recipient relate to each other. Email is no different to Bitcoin, save for the fact that a record of the sender and recipient and content of your email is not stored in a public ledger, one against the other. We know it's stored in a private database, but that's another story, wink wink. The position that Bitcoin is money is fundamentally wrong, and systems like it have existed for many years without gaining the attention of any three-letter agencies. Take, for example, Farmville, the hugely popular Flash game on Facebook. Farmville is available as an Adobe Flash application via the social networking website Facebook and Microsoft's MSN Games, and was available as an application app for the iPhone, iPod Touch, and iPad for a brief period in 2010. The game is free to play. However, to progress quickly within the game, players are encouraged to spend farm cash in Farmville or farm bucks in Farmville 2, which are purchasable with real-world currency, or to get help from their friends. After its launch on Facebook in 2009, Farmville became the most popular game on the site and held that position for over 2 years. At its peak in March 2010, Farmville had 83.76 million monthly active users. Daily active. Oh wow. This hugely popular game is no different to Bitcoin in nature. Farm bucks exist in a closed system just as Bitcoin does. The only difference is the size of the space where the messages are sent. And in the case of farm bucks, the number of users and transactions messages sent was large. Farmville had 83,760,000 monthly active users, and not a single one was subjected to KYC AML to exchange fiat for farm bucks or farm cash. Why not? What happened to that money? Why weren't FinCEN and SEC all over that game as they are on ICOs? No one can explain this adequately. This example is very useful as a tool to pull back the curtain on the people who assert that Bitcoin is a money and is fundamentally different to a money kept in a game. All the rationales they use, mostly in the form of run-on sentences, to explain the differences are inaccurate and never address the fundamental process. If they did, they would have no choice but to conclude that Bitcoin is no more subject to regulation than farm bucks or PGPR. And there's a lot more to this article, but we're not going to finish it. Sorry. But yeah, it does drive home the point that, you know, the fact that other people have chosen, that people have chosen to invest in this space, that's entirely on them. And it's no different than buying farm bucks, with the exception that you can actually get US dollars back. But that's like the only exception. And in that place, the only people that should be regulated at all, if anybody is the exchanges. Now, if people try to do it though, if I sell somebody an apple for $1 and I grew the apple, or even if I didn't, if I bought the apple somewhere else and then sold it to them, that's about how much regulatory authority that the U.S. government has over Bitcoin. Just because you can't be there. I mean, really, you cannot be there. Anyway, it is with that I'd like to close out this episode, but we will be back again on Wednesday at 8 p.m. Pacific Standard Time. And so until then, I'd like y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else will do it for you. Not even Trump. Thank you very, very much for listening. I certainly appreciate the support. You can find me on Twitter, and I will be posting this up on my YouTube channel as always. And so, until Wednesday, I want you all to have an excellent evening, and thank you again for listening. The last dance for the evening will be Metallica, Hardwired.